Hey everyone, today we're going to talk about the mechanics of the Twitter poison pill. We'll hit on some background information on the Twitter situation, what a poison pill is and what Twitter announced, and the math of how it would actually work out if Elon bought 15%. So if you haven't been following this situation, Elon Musk approached Twitter and made an unsolicited offer to buy the company for around $43 billion. Twitter has not exactly been thrilled about this, so they've actually adopted a poison pill. Quickly, let's hit on what a poison pill is. From Investopedia, the term poison pill refers to a defense strategy used by a target firm to prevent or discourage a potential hostile takeover by an acquiring company. Potential targets use this tactic in order to make them look less attractive to the potential acquirer. Although they're not always the first and best way to defend a company, poison pills are generally very effective. So let's move on to why Twitter put a poison pill in place. It's actually pretty simple. They aren't looking to go private or entertain the idea of a hostile takeover without good faith negotiations. So jumping into the Twitter press release, here's what they had to say. The rights plan is similar to other plans adopted by publicly held companies in comparable circumstances. Under the rights plan, the rights will become exercisable if an entity, person, or group acquires beneficial ownership of 15% or more of Twitter's outstanding common stock in a transaction not approved by the board. In the event that the rights become exercisable due to the triggering ownership threshold being crossed, each right will entitle its holder, other than the person, entity, or group triggering the rights plan, whose rights will become void and will not be exercisable, to purchase at the then current exercise price additional shares of common stock having a then current market value of half the exercisable price of the right. The rights plan will expire on April 14th, 2023. So in plain English, if you acquire 15% of Twitter unsolicited, you will get diluted by roughly 50% at your expense. Now let me walk through the math and quickly show you how this would play out in a hypothetical situation. For simplicity, we're going to use an imaginary company, Company A. They currently have zero debt and zero cash in our example, just to keep things simple, but having debt and cash wouldn't actually change anything in the underlying math. It just makes the math a little bit easier and less confusing. This company has 100 shares outstanding, currently each trading at $1 per share. That gives them a market cap or an enterprise value of $100. If you aren't familiar with enterprise value, it's the market cap plus debt less cash. So let's take this company and have Elon acquire 15 shares. Once this happens, all other 85 shareholders will have the right to now purchase one share at half the market value. So in this case, we'll use 50 cents per share. Elon does not get this right as the individual who triggered the shareholders' right plan. So they actually cannot participate in this half-off sale of the shares. This will actually raise an additional $42.50 of cash, and it will increase the market cap by this $42.50, and the share count will also go up by an additional 85 shares. The total market cap will now be $142.50 with 185 outstanding shares. Each share will now be worth 77 cents, 142 divided by 185. So if you're a regular shareholder prior to the poison pill, you owned one share that represented 1% and $1. Now you own two shares representing 1.08% of the company worth $1.54, but you only paid $1.50. That 4-cent difference was actually received free from Elon as he's being diluted out of the company. After the poison pill is triggered, Elon went from having 15 shares that represented 15% of the company and worth $15 to having 15 shares that represent just over 8% of the company and now worth $11.55. Elon lost 23% of his investment instantly by triggering the poison pill. If Elon were to actually do this in real life, quick math would tell us he'd buy 15% of Twitter, which would cost $5.2 billion. And he would instantly lose 23% of that, or $1.2 billion. That's a lot of money, even for the world's richest person to just throw away. So there you have it. That's the poison pill. Now, the actual purpose of this is actually just to slow down the process of an acquisition and figure out what is actually best course for the company. They could very well sell the company, but it's going to go through an auction process and not be an unsolicited bid. And they could also decide that the company is better off left public. These are things that the board needs time to figure out, and putting the poison pill in place allows them the time necessary. So, as always, thanks for watching. Please like and subscribe, and if you have any questions or comments, feel free to leave them below. Thanks so much.